Okay, I'm sorry if you're a bear, but I'm just going to shoot it to you straight here in this video. Unfortunately for the bears, markets are most likely going higher over the next couple of weeks. And I'll explain this as easily as I possibly can. But the markets are pretty bearish right now. The bears, generally speaking, have won the last couple of weeks. If you look at something like the RSP, again, if you look at the headline S&P, you're not going to understand this. You're going to say, what the hell are you talking about? Obviously, big tech has artificially held the S&P up. But when you look at something like the RSP, it's died, okay? Like full-blown correction, full-blown disaster in the RSP. Now, you did recover a bit on Friday. The RSP was up 1.4%, up another 0.15% in after hours. But generally speaking, you're still very bearish on the RSP. The RSP is the equally weighted S&P that is still down 6.5% following the bounce that you had on Friday. From the top on the RSP to low, you fell 8.5%. So you actually had an 8.5% internal correction in the markets. Actually in the markets. The S&P only fell about 4% because big tech did not fall all that much. But if you look at the broader markets, you basically just experienced a correction. Now, something that was kind of looming over markets last week in the background, it was not front and center on Wednesday, but definitely in the background of last week, was the possible government shutdown. Now, government shutdowns in and of themselves, it's a toss-up, right? If they're negative for markets or not. Sometimes they are, sometimes they're not, sometimes they're not a big deal, but sometimes the markets really care. And it seems like the markets cared last week. And they also cared about Jerome Powell's hawkish statements. We had Fed Goolsbee that came out on Friday in the morning that basically said they're on track to get to 2%. The Fed plans to cut a couple of times next year, and kind of alleviated some of the concerns we had from Wednesday's disastrous Fed Powell conference. I don't know if he just did not get enough sleep. I don't know if he just didn't have his way with words that he normally does. Like, that was not Jerome Brady. That was Jerome Purdy. I don't know what the hell happened. Sorry, San Francisco, but that was just not good, okay? Not good at all. So we kind of recovered from that, but there was still this issue of the government shutdown. Now, we had PCE Friday morning that came in good, and that's what really caused the RSP, the equal weight S&P, to really outperform the market cap weighted S&P. The market cap weighted S&P, the SPY, was up 0.86% in regular trading, up 0.16% in after hours. Again, the RSP did almost double that and was up more than that at one point, and did end up, falling a little bit towards the end of the day, just like the broader markets. But now that the government is funded, crisis is averted for over 1 million government employees that would have been furloughed during the holiday season. What do we have now? Well, we do have some data coming this week, and I will share that with you in this video. Specifically, Tuesday, we have the big data. Keep in mind, Tuesday is a half day. Monday will be a full day of trading. Tuesday, half day. Wednesday, markets are completely closed for Christmas. Thursday and Friday, back to business as usual. Now, Thursday, you get initial jobless claims, and you have some other smaller stuff coming out. But Tuesday is going to be that big data. Well, now that the government is funded, crisis averted, markets are likely going to be in a mode of going higher at this point because things are just already so bearish. 67% of the S&P is in a current downtrend. Again, you've almost experienced a 10% correction in the equal weighted S&P, okay? That's a lot. That's a big fall. Normally, when you get down to those kind of drops in the equal weight S&P, you do tend to see a rally. Now, I wouldn't be surprised if it's more of a broader based rally. I wouldn't be surprised if big tech doesn't play along as much, and I wouldn't be surprised if the equal weight S&P outperforms the headline S&P. I just wouldn't be surprised there. But again, 33% of stocks trading above their 50-day moving average, pretty correctionary levels. The AI Investor Sentiment Survey was 40.7% bullish, the lowest level that we had seen at least since November 27th, but that did not incorporate Wednesday's sell-off, so the number's probably going to come in pretty low as well for this upcoming week. Overall, pretty negative. CNN's Fear and Greed Index is at 28. I mean, the VIX spiked 75%. It went up to over $28. Now it's down to 18, right? So you have all of these different market measures that are extremely negative, and we just had some really good news. The government is, after all, not going to shut down after 2 failed votes to pass a budget. Okay, this is like a stopgap bill. It's only going to fund the government until March. Yes, we're going to have that issue again. But the markets, I mean, they're not that forward looking. Like, you're not going to get a sell-off because it was only passed until March. This will most certainly be seen as good news coming Monday morning. Okay, also worth remembering, which a lot of people have forgotten. Again, markets have been so weak recently. It's been easy to forget this. But from December 15th through December 31st, that tends to be the best 2-week period of the markets historically ever. You tend to be up almost 2% on average. Some years are much better, some years are not as good, but it does tend to be a very bullish period for markets. Okay? Mix that with your big risk catalyst out the way. PCE out the way, CPI, PPI, the Fed, earnings season, all of these things are done and over with. You don't have much. Now, let's start with Monday. Monday, so tomorrow morning, you have Chicago Fed National Activity Index and the CB Consumer Confidence. That's it. Those are not huge pieces of data. They can definitely add to markets' enthusiasm or dampen things down a little bit depending how they come out, but it's not going to make or break the day by any means. Tuesday, you have durable goods orders month over month for November. Last month was positive 0.2%. We are expecting negative 0.4%. So expectations are pretty damn negative already. Like, that's pretty negative. I wouldn't be surprised if things come in actually a little bit better there, and that would be seen as, I think, a positive for markets. I mean, good data is good data. You always want to see good data versus bad data, no matter what it implies for Fed policy. Going with that logic, then a slightly better than expected number there would be good news. You also get new home sales and new home sales month over month. That data coming out on Tuesday as well. Richmond Fed Manufacturing Index and Richmond Fed Services Revenues Index. And then again, Wednesday markets are closed, so there's nothing there. On Thursday, we have initial jobless claims, expecting 218,000 there. Again, a low number is going to be good for markets, at least in theory. We'll see. Obviously, things can get weird here. I don't know if the markets are going to respond good or bad to bad or good data. Is this like 2022 where slightly weaker data is seen favorably, or is it like the entirety of pretty much this year where bad data has been bad for markets? I have no idea. I have no idea if Jerome Powell kind of switched things up from the market's perspective, basically saying they're not going to be cutting rates for a long time. Now, on Friday, we have good trades balance, wholesale inventories, retail inventories, excluding autos, and the S&P Case-Shiller home price month over month and year over year. So you don't have much for economic data. Earnings season is over with, at least until like January 15th or so. Then you start to get some of your banks like Citi, Wells Fargo, and JP Morgan, and as well as BNY that will report earnings. But really, I just see it as blank space, blank nothing for markets over the next like 2 weeks or so. And typically when that is the case, in a seasonally bullish period for markets, following the markets being this negative, like markets are really, really negative right now. CNN Fear and Greed Index is at 28. It was at 22. That's extreme fear levels. Just to get back to a high neutral or a low greed would likely be a pretty good rally in markets, a good 2-3% rally for markets just to get back into slightly greed territory. Maybe it would take a little bit more than that. I don't know. It definitely seems the most likely scenario at this point, considering the government is staying open. Now, if the government had shut down and there was no stopgap bill, yeah, this would be a totally different video. But I do think that's your big catalyst heading into this upcoming week. So unfortunately for the bears, when I think about all of these things logically, a super bearish market, really no more risk catalyst left. Again, we got PCE, CPI, PPI, personal spending. We got GDP numbers. We got initial jobless claims last week. We got, again, the Fed, mix the debt ceiling getting raised, the funding of the government actually going through, the government not shutting down. I don't see the bear case, at least over the next couple of weeks. You also have the upcoming January effect where markets just tend to go up in January. Some of this has to do with tax loss harvesting. Some people sell stocks in December, buy them back in January. I think that, broadly speaking, pretty well happened in the broader markets. I mean, if you look at the RSP, ever since really like the 1st of December, markets started to fall, right? Could that set you up for an even larger January effect this time around? Possibly. Again, we don't have much going on in the first couple of days, the first week or so in January. So, the next couple of weeks could be pretty good for markets. Now, depending if we swing back to a very bullish, expectation for stocks next year, if we kind of swing back to where we were, 2, 3, 4 weeks ago, then maybe we're set up for that correction in February or March. But from my perspective here, I just don't see the catalyst to cause markets to fall more. Obviously, those are like famous last words. Anything can obviously happen. But from my perspective here, it looks most likely that this upcoming week is going to be a great week, and the next couple of weeks are at least going to be pretty good, to say the bare minimum. You could see a sell the inauguration kind of event, but that's kind of the first big negative catalyst that I see between now and January 20th. Again, sorry, that's just my opinion. Let me know what you guys think about this down below in the comment section. That is it. Have a fantastic rest of your day. Go Lions, baby. And I will see you in the next one.